All right. Hey, yo, what's up, Investor Z? What's up? Ah, shit. Hmm. 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 All right. Well, yeah, I'm familiar with him. What's up? What did he do? Or what's the current hey, I just had a brain fart. Controversy. I was like, dude, I had the word, but then it left me. What happened with him? Really? Wow. How did he respond to that? That's interesting. I mean, that's good marketing. I mean, if you can get iShow Speed to influence his followers to start trading prop firms, that's definitely yeah, I mean, I wouldn't either because if you're not in this space, I mean, they're only they're only big in this space. They're not big outside of this space. But planting seeds, yeah, I mean, I think that was probably a really good idea because even if he doesn't know who you are, if you donate a large amount, obviously, and then he's streaming and you can get your brand out there. They say he says your name, and if you can get some of his audience to get curious about, oh, wow, there's actually something out there where I can trade and gamble and potentially make money. If I because as long as you plant the seeds of curiosity. I would say that was a good marketing plan. I'll give it to whoever thought about that. I'll give it to him. That was a really good idea, a good move, a really great chess move. I'll give it to them. Yep. Yeah. Yep. That's a great move, man. With the donation bubble, it says the name and everything else. If if it says the name, then yeah, that was a great move. Paying $500 for hours of advertising on a very popular stream, great move. Mm. Good morning, Alfred. Well, man, I missed that gold play. Man, I just hate it when gold does this. I just hate it when it pulls back, and it pulled back during that golden window that I have for gold around like 7:30. It pulled back, and this was a great follow up trade right here. And I hate the fact that I missed it. Hate the fact that I missed it, man. I mean, it's not. That's not a. Yeah, I'm not gonna trust the Bears. I'm honestly, I'm gonna take if I take a short setup on the Nasdaq, it has to be. I mean, we're super bearish. I'm just not gonna deal with it anymore. I'm just not gonna deal with it. The market, all markets, for whatever reason, wants to go up. So shit. Who are we to fight the market? If it wants to go up. Oh yeah, I forgot that you was in that short on Friday. Did you fight against it, or did you just accept the loss and go with the trend? 743. Yo, you know what, Investor Z? You know what's crazy? That's exactly what we was talking about last night. I was like, man, I'm pretty sure the Bears fought this thing all the way up because you can just tell after they all got stopped out, the market was just grinding to the upside until the end of the session. So that just told me that the Bears were fighting that thing the entire session. And they probably just came into the market today just to get their revenge. Hey, yo, what's up, Texas? Yeah, we're waiting for that. We're waiting for the orb to form. If I was paying attention, as you can see, the market respected this trend line perfectly. It respected this trend line perfectly to the T. And this was a great move back up. But I do think that we could see some profit taken. We can potentially see price take out 900. If we get to 900, depending on how the market is moving, I'm going to look for shorts. But I thought they had a real rest settings. I thought this shit was real. I thought this thing was real. All right. Okay. Well, we got one more minute into the orb forms. One more minute. And this is not a big orb. This is damn, the ES is even worse. The orb on the ES is worse. You said if you close above 855, we're going long? Yeah. All right. So 322. 322. 322. All right. So 322. So we have 80,000 contracts in the first 15 minutes. We know if it's usually under 100,000 contracts in the first 15, we usually see chop afterwards. So, mm. Mm. Yeah, Texas. Once we started collecting this data, uh, I started noticing a pattern that on the days where we have less than 100,000 contracts, we really don't see the market move. I mean, obviously you'll have your outlier days where the market, we will see sometimes the market not have 100,000 contracts in the first 15, and we still see a big move, but it is not the norm. Those are definitely outliers. Definitely outliers. But for the most part, yeah, we really don't see the market move or expand from that range. So usually when I see less than 100,000 contracts, that usually gets me in. Okay, well, I got to really pick my spots. I might have to actually trade within the range versus trying to find a move outside of it. But with the range being so small, this is only a 40-point range. It looks like just about a 40-point range. Now, this one is kind of tough. It's kind of tough because we have this range. We have price breaking structure to the downside, rejecting from this range. And technically, this would be a retest back into this range, technically. So, this is kind of why we're seeing the bears kind of come in here because technically, there are sell orders here. There are buyers trapped here. So if they can get break even, most likely they're going to want to sell out of their position for a break even trade. So it's highly likely for a slight rejection from this area. And if the bears are serious, we would have to see how they react here at this trend line. But honestly, the bears suck. I think they're going to get stopped out. We got news Tuesday, Thursday, and Friday. Let's actually look at that. Because I know we have a bunch of Fed speakers today. I know today is like we have Fed, Musalem, Williams, and then at 11 o'clock Central Time we have Barkin, Hamak, and this is actually I don't know who this is. This is the first time that I've seen this name. Moran. Okay, so yeah, this is the first time I've seen this name. But yeah, we have S&P Global Composite Manufacturing and Services 8:45 tomorrow morning. We got Fed Powell speaking at 11:30 tomorrow. We had some housing news on Wednesday, which I don't think that's going to be too. Obviously, we have the Thursday lineup. So we got PCE. We have core PCE for Q2 on Thursday. Some more Fed speakers. And Friday, oh yeah, we got PCE on Friday. Okay. Mm. You went long here. Thanks, Alfred. I probably have to look at. I probably have to make an alarm because I definitely forget this thing. I don't know why. I definitely have to. Okay. Well, looks like Q's is at the. Hmm. 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 578. Mm, mm. So I wonder if the Qs is going to make it to this order block here at 599. I If it continues to push and gets to this gamma level at 600, we could see a rejection there. We could see some profit taking in this area right here, especially with this order block sitting right here. So congratulations on that, Texas. Hold on, you said hold on. Are you saying that you're going to get out at 892? He says okay, okay, yeah, 892. All right, yeah, I kind of read that too fast. All I read was I'm all out, and I was like, okay, and then I was like, hold on, 892. Yeah, I'm thinking that I'll look for a short unless we get like a pullback. My concern here is that the bulls are going to fail here. That's my concern. I'm concerned that the bulls are going to fail. I don't think we'll see a reversal. I just think that we'll probably see a pullback. That's what I think. Or I think it's better just to wait for the pullback instead of trying to look for the trade up here. Let's look what our baby gold is doing. Hmm. Hey, what's up, Tony? So you said it goes to a 1 to 3 to a 1 to. So what does that mean? A 1 to 2.56. Are you talking about a measured move? Hmm. Mm. Okay. Yeah, I kind of figured, man. I kind of figured that the Bears was going to get stopped out of this. That's definitely the Bears getting stopped out of their position and having to sell their way out. Or I'm sorry, having to buy their way out of their position. You said it rejected. Yeah, this is gonna be a tough area for. This is gonna be a tough area. It definitely will be because I mean, if the Bears did not suck, this should be. We should have seen a rejection here. We should have seen a rejection, and it doesn't mean that we're not going to. It's not like this range high was kind of like down here, and a breakout would be a retest of a high right here. So it's not like the opening range was down here, and a breakout would be a retest of this highs, and this will be a great area to take profits. But in this situation, the range is literally closer to supply because this is supply. I mean, even though the Bears suck, I mean, the Bulls need to still break out before we start to see before we see a continuation to the upside. So we have to respect the Bears until the Bulls break out. And this is why I do not want to take a trade up here because we're still in supply. And the Bears are going to try until they fail. And I really don't want to deal with that. I don't want to be stressed out in a short, and I don't want to. I don't want to. I don't want to fight the momentum right now. I really don't. I just want to. I'll wait for the breakout where the long will be easy, and the Bears will be forced to buy themselves out of their position. But I will consider a short if we see a pop to R2. If we see a pop to R2, I'll consider a short there. Mm. Yeah, the Q's rejected right here at that area, but this is definitely bullish for the Q's. It's definitely bullish. I wouldn't short. It's going to be some resistance, obviously, but once we get past that resistance, we have two bullish engulfing candles opening at the highs of the previous candle, and then we have the next candle opening towards the highs. If we can get a rejection and it close kind of in the middle, then I would consider going short. But this is definitely bullish, at least for right now. Yeah, it looks like you got 700 contracts. It looks like this institution, whoever made this order, wants 700 contracts at $600, at $600.84. So usually when we see orders like that, it's obviously is going to act as a magnet, obviously. So 684 cents. I'm gonna keep my eyes on that. So actually, right around this gamma level right here, it's right around this gamma level. Mm. That's the whole point of it being like that, though. All right. So we just. Oh, never mind. I thought it was going to take out Friday's high, but it stopped short at Friday's high, 2 points before Friday's high. So we did not see price take out Friday's high. Not yet. I mean, well, I will say one thing. Mm, 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 Well, we can definitely chalk this up again. Again, the 100 the under 100,000 contracts added in the 15-minute rule. This is a great example of why we should always be concerned when the market does not add 100,000 contracts in the first 15 minutes. This chop is dreadful. There we go. We just took out Friday's high. This is dreadful chop. Dreadful, dreadful, dreadful. This is the kind of price action where if I wasn't streaming, I probably would have taken the day off. I would have looked at the charts and said, I don't want anything to do with what's going on. I would have analyzed the chart, probably set a limit somewhere, and just let it play out. I mean, if I don't get this order filled before 9:30, I'm gonna have to kill this order on gold. So right now, for anybody trading gold, I'm looking for the market to dip below this low. There's like a little. I got my order sitting around like 147, like around right here, and I'm looking for the market just to dip and then trade back up on gold here. But it looks like I may not get it. I'm kind of beating myself up today because when I looked at the chart this morning on gold, I was like, man, this thing is just trending. And I was waiting on the pullback, and I did not look. I didn't come back to the charts around 7:30, and I need to start every time. Every time when I don't look at the chart around 7:30, for whatever reason, the days where I don't look, that's when around 7:30. Today it happened around 7:25. The low happened around 7:25. And today I was like, well, gold is trending. I don't think it's going to pull back. I'll just wait until like 8 o'clock, around 8 o'clock. And I come back to the charts and see that it pulled back and already made the move that I was looking for, right back into an area of resistance here. And this is why I absolutely enjoy trading gold. Because you, unlike the Nascrack, Nas Diddy, or whatever you want to call her, you can safely short an area of resistance, even if the market is in an uptrend. If you missed the short or if you missed the long, you caught the short. And I missed both. So I'm looking at myself, I'm like, man, I hate seeing these easy moves on gold happen and I'm not participating in none of them. And there we go. This is why I did not want to long up here, because I just know that if you didn't take profits, if you're not taking profits in this, you're really playing with fire, because we are in supply. You're playing with fire here. And it looks like they swept the highs of Friday. They swept Friday's highs 1 point. And it looks like the Bears, or at least the Bulls, are taking profits at Friday's highs. Like I said, I don't think it's going to be a reversal. I'm just waiting on a deeper pullback to go long. Hmm. Hmm. Where's the orb lows at? I'll wait for it. I'll wait for the market. I'll take an orb low trade. If we can get, if the market pulls back all the way to the orb low, I'll take an orb low trade. That's going to be my plan for today. I'll take an orb trade. I don't like the fact that we're just too close to supply. I don't like it. He says the book says to go long. I don't know about that one, Investor Z. If you go long at these highs, I don't know. Yeah, doing the same thing. Okay. What is up with this senior citizen price action this morning? Actually, let's see, because I think we may.
The unemployment rate is low and consistent with full employment, and even though supply and demand growth have both come down together, therefore the unemployment rate has been somewhat stable at full employment. If you look under the surface, there are some things that tell you that at the margin, the labor market is softening.
All the numbers you mentioned are compiled by the Bureau of Labor Statistics, and there's a lot of concern the president fired the commissioner of labor statistics, and there's a lot of
Hopefully you can get it,
anxiety
Texas.
about the
Where's your stop at?
reliability of the statistics going forward. So I want to ask you two questions. One is, how important is the reliability of government
Yeah,
statistics?
man, the Nasdaq is really good at doing that.
Policymaker? And two, how worried are you about their continued reliability?
The reliability and integrity of data are critical for making any economic decision, monetary policy being one of them, but they're also very critical for businesses and households in terms of making important economic decisions. There's a reason, not the only reason, why the U.S. is the largest, most dynamic economy in the world with the deepest capital markets, is because it is and has been the best measured economy in the world, which that leads to good economic decisions, which leads to a bigger economy and more growth and deeper capital markets. So integrity and reliability of data is key. In terms of the Fed, we look at three types of data. We look at government statistics. We look at a lot of privately produced data sources, and we cross-validate between, on a particular theme, we look at different types of data or from different sources. And in addition, we have 12 reserve banks spread around the country, and these banks, including my bank, are permanently in close contact with businesses and households,
no way.
elected
Okay.
officials, and so on,
No way.
talking about the economy. So we get a
No
lot of
way. Let me share this with you
anecdotal,
guys,
impressionistic
because
information, which we use
I
to
swear
cross-validate what the data is saying. So I'm
reality
very
is,
confident that we
it can be
continue to
cute
do
sometimes. So
our job.
Are you
I've already
worried
shared
about
with you
the
guys that
reliability of government data
I
going
won't be
forward?
here
I think there are opportunities for
Thursday and Friday because I have to go out of time, go out of
the
town for a
timeliness,
wedding.
and
And
the revisions,
it's in St. Louis.
variability of data,
And it's very
across a whole host
interesting
of releases.
that
Are you worried that
this
they're gonna
guy
be
is the
corrupt?
president and chief executive
I think there are
officer of the
opportunities,
Federal
for
Reserve Bank of St. Louis.
Um,
I'm like,
so, as
dude,
you
what are
also
the
know,
odds of
there's a
that?
lot of concern
What are
now
the
about
freaking odds
continued
of that?
independence
That
of
is
the Fed. We seem to
interesting.
be in an era in Washington where
That's
things that we
interesting.
took for granted are no longer taken for
What are the
granted.
odds?
Um,
Out of all
I
places.
think we all know why we have an independent central bank and how important that is in maintaining price stability and a stable economy. But like on a scale of, compared to say 1 or 2 years ago, how worried are you about the continued ability of the Fed to operate as an independent central bank?
Monetary policy independence is important, as you said, because if you look across countries in time, countries with more central bank independence, and even across the history of the U.S., you can see that, lead to outcomes that are better for the people of the country, which means in our case,
Oh no, I was
lower,
saying
more
that
stable inflation and higher, more stable
the guy, the
employment. So that's very
Musalem
important.
is how I believe you pronounce
It's
his
very
last name.
important that monetary
He's
policy
the
independence come hand in hand with accountability and
CEO
transparency.
of the
That's
Federal
really
Reserve
important.
Bank of St. Louis,
At
and
the Fed,
that's
we are
exactly what
accountable to Congress.
I'm going to St. Louis this week for a
and
wedding.
through the accountability to Congress, we're accountable
So I just
to the
find that
people we
very
serve, the people that
interesting
elected
that
folks in
what
Congress.
are the odds of the
That's really
coincidence
important. We try to be as transparent as
that I'll be
possible
in St.
through
Louis
events
this
like
week?
these, through testimonies to Congress, through data releases, through speeches, et cetera. So all that's very important.
Yeah, Texas,
Over the
you
history of the
you should get it.
of the Fed,
I think it's going to
Congress has
touch
realized,
92. I mean, it's right
and
there.
recognized the value
The Bears
of
ain't
central
going to do
bank
nothing,
independence, and
especially
over different periods
because
of
they
time,
held
Congress has
they
protected
held
the
these
Fed
EMAs. And he
against
still got
political dominance. So at its creation
VWAP in the
in
200
1913
sloping
Federal
up to
Reserve
the
Act, that was
upside.
the
So
case. In the
I'm pretty sure you're going to get your
1935
target hit.
Banking
I'm
Act,
pretty sure.
that was the case. And in the 1977 Federal Reserve Reform Act, that was also the case. And Congress was also very supportive of the Treasury Fed Accord in 1951, which clearly demarcated the responsibilities of debt management at the Treasury and monetary policy at the Fed. So those are my views.
And do you think it's at risk?
I think there is more awareness of the issue, and there's more debate about the issue.
So you mentioned the demarcation between debt
congratulations.
management and the Fed's portfolio, and you've been watching the Fed for a long time. So what do you think we've learned about the tool quantitative easing? What is it? How well has it worked? What are the questions we've answered? What are the questions that we still don't know?
So quantitative easing, I think, was very useful when we hit the zero lower bound of
See you
interest
tonight,
rates
Texas.
twice after the global financial crisis and after COVID. It provided the Fed with an additional degree of freedom, an additional tool it needed to make sure monetary conditions were consistent with achieving the dual mandate of maximum employment and price stability. So it proved to be a very useful tool. There has been a whole host of academic studies which investigate the issue and have concluded that it's a very useful tool. I think it's very important for quantitative easing when it's used to be very clearly communicated to the public as to why it's being used, as to whether it's because nominal rates are at zero, that is, so more guidance about future monetary policy and more impact across the interest rate curve is required through an additional tool, or whether QE is being used for market function reasons. I think it's very important to communicate that to the public. I think it's very important to only use QE to support the dual mandate and to not be perceived as directly or indirectly be helping with debt management responsibilities, which in my mind are the domain of the U.S. Treasury.
And do you think that, so one of the complaints that's made about QE is that somehow it exacerbated inequality by driving up asset prices and rich people own more assets than poor people. Is that is that true? And B, if it is that just a cost of monetary policy?
In my view, inequality is being driven by, has been driven by many factors other than monetary policy, including home ownership rates across different demographics, contractual savings plans across different types of employment, which allow asset accumulation. So there are many, many factors driving inequality other than monetary policy.
So the Federal Reserve System as a whole, largely the board, but it delegates some to the reserve banks, has responsibility for supervision and regulation of the banking system. We did a lot after the global financial crisis to raise capital requirements, tighten regulations. We're now in the process of somehow undoing some of them, and I'm curious how you see the balance. Is this the right time to be easing? We are in a boom time in many respects. Is this the right time to be adjusting these requirements? Is this a necessary correction? Is there a risk that will go too far?
So I'll refer you to Vice Chair Bowman's recent remarks. What the board is focused, and to the Board of Governors, what the board is focused on is a few areas. So tailoring of regulations to risk profiles.
I don't know how
which
much
tend to be
I was
correlated with
down.
size of financial institutions and complexity of financial institutions. So that's one area in which work is being done. There's a fresh look at the capital regime, whether it's Basel III or the ESLR. In addition, there's an emphasis on training supervisors, et cetera, which is really important. I think it's always important to review the
This looks like
regulatory framework, make sure that
this
it's
looks like a
working
good long
for
setup on
the
silver.
financial system
I'll take it.
of the time.
This looks like
and
a
the
really
risk
good
profiles of the
setup
different
on
players
silver.
in the financial system. In passing, let me say that the stress tests were just concluded a few months ago, and they show that with the current regime, the banking system is capable of withstanding a very material negative shock to growth and to asset prices and remaining very well capitalized.
So when you talk to the banks in your district, you have a number of regional banks in your district, what do you hear from them about the quality and the severity of regulation and supervision?
So the bankers in my district tell me that banking conditions are really good right now. Credit quality is good, capital is good, funding costs are good, loan growth is good. In terms of your direct question, I have in my district the benefit of having different types of banks. I have very small community banks and larger regional banking organizations. And all of them say that particularly the smaller ones that have less potential overhead operations and have less risky, less complex operations, the message is, a tailored approach to regulation would be beneficial and would be helpful to banking conditions and activity.
If you look ahead, I don't know, 5 to 7 years, do you think that stablecoins and other forms of digital assets will be a significant part of our daily life and our financial system?
I think the payment system is going through, quite an evolution now. We live in the age of AI and technology. So I do see an evolution in payments. The Genius Act just passed a few months ago, and I think it has the potential to unlock, innovation in terms of the exchange of value in the economy. I think it's very important that, as you may know, the Genius Act says that stablecoins can't pay interest. I think it's very important that in the implementation and in the emergence of stablecoins, that part of the act be, respected and enforced.
And why is that?
Because if stablecoins were to pay interest, there could be some financial stability implications for competition with bank deposits and the like. So, it's very important that they remain from my standpoint, a payments instrument and not a savings instrument.
But do you think they'll play some bigger role in the payment system? I presume it seems hard to imagine they'll play a less of a role.
I think there's a potential for them to increase. Right now, the volume and transactions of stablecoins is mostly in the crypto space and in the international payments space. But with the new bill and the enabling regulation of that bill, I could imagine the use of stablecoins might increase. And you've seen some retailers exploring issuing their own stablecoins for their own purposes because they pay, very high fees to credit card companies, and it's in their interest to internalize those costs.
Exactly.
Yeah.
So I want to take you back to something you said in your speech.
The Nasdaq is definitely moving like a senior citizen.
You made a really interesting point that
the ES hasn't actually. The ES just hit 10 points.
Have a simplistic view of inflation that
at 820, 722. So we're at like 13 points.
But you made a point in your speech.
I mean, that would have been a good trade on the ES if you took the orb breakout to the upside.
Which I presume you mean largely the decline in the net immigration. So can you talk a little bit about how you view immigration, both in terms of the short-term cyclical thing, as you described, or maybe it's not cyclical, short-term structural thing there, but also the sort of the long-term potential for the U.S. economy?
Yeah, we're trying to, and I'm trying to disentangle cyclical and structural factors that are all at play right now, so I can understand where the slack in the economy is or isn't. So understand where potential is and where the cycle is relative to that potential. So we've had in the labor market, as you know, is cyclically the uncertainty about tariffs and other policies was very high initially in the year. That led employers to cyclically pull back on hiring, and they are right-sizing their labor forces through attrition by not hiring and by letting folks that are departing just depart and not backfilling. So that's kind of the cyclical story behind the labor market. The more structural stories behind the labor market are on the supply side. The number of immigrants participating in the labor force likely declined. There are estimates out there of a change this year. I think those are overestimates. A change in immigrants this year in the labor force of close to 2 million people. That's a meaningful number. Our economists think that's an overestimate, but that's the number that's out there, and that's a meaningful change in the supply of labor. I don't hear that too much in my district. But if you go further west in the country, in the agricultural sector, you begin to hear that it is impacting labor supply there.
And that affects wages, and that affects inflation.
So as I said, we observe negative supply shocks in the services side of the economy right now, in the labor market service side of the economy, which means
it's always a good price action day when you're on the right side of it.
A lower pace of hiring in the services sector.
When you come late to the party.
Supply side effects, and a higher rate of.
I had an opportunity to buy the orb high.
Potential. So we're starting to see the footprints of that. Is that Immigration one
pass
to
on
one,
it though.
hard
I
to
chose
say,
to
but
pass
the
on it.
fact that this has begun to happen
If
when
I
the
actually
flow of
bought it,
immigration has
so if I
declined
bought
suggests that the two
this, my
things
first target would have
are
gotten hit.
related.
And what about the long-term productivity growth in the U.S.? What effect does this have on that?
So right now we are, if you think of the U.S.'s history
I would have
as
gotten my first
being
profit
either in a
target
high
hit.
productivity regime or in a lower productivity regime or
I would have
more
got a
kind
hit
of
at
average productivity
93.
regime. And for example, in the late
And my
90s, we were in a
second
high
target
productivity
would
regime.
be probably around
Right now,
where my
my
limit
understanding is
is.
we are close to an average productivity regime. So there's a tremendous promise of
So
AI.
this would have been a winning trade for me
That
today if
promise still
I had taken
isn't
it. I just didn't want to deal
visible
with
in the macro
the
data.
slow price
It
action.
is visible in the micro data in certain sectors, very much so. And beyond
I
AI, there's
didn't
just
want to deal
business
with it.
process automation. I visit plants, manufacturing plants all over the country, particularly my district. And what you see is
I didn't want
the
to
plant
deal with the
manager tells
potential
you see all those
pullback to the ore
machines here on the
below.
left-hand side of the plant. These are enormous plants. Well, a few years ago, those machines were people. And you see all these people on this right-hand side of the plant.
Man.
Well, a few years from now, there'll be much more machines. So there's, even in manufacturing, there's a beyond just AI, there's this capital deepening and drive towards efficiencies.
But I was asking you about what effect on long-term productivity growth will limiting the number of immigrants to the United States have?
It's hard to say that that's going to increase productivity. Whether it will decrease productivity is an open question. What for sure I can say is that there'll be less labor force growth. That doesn't mean a less productive labor force, but it probably does not mean a more productive labor force.
Okay.
Yeah.
And finally, as you well know, Federal Reserve Bank presidents are appointed for 5-year terms. And in their infinite wisdom, the Congress of the United States, I think it was the Congress, maybe it was the Fed board, said all the terms expire at the end of February of next year. Are you worried about being reappointed?
So reserve banks are a cornerstone of central bank independence. And that's the case because it's through the 12 reserve banks that different views about the economy get brought to the FOMC table. Different information about the economy gets brought to the FOMC table. Different policy views, given the views about the economy, get brought to the FOMC table. So to the extent that this is a large country, a large economy, the 12 reserve banks are a very important part of central bank independence. And my team spends our entire working hours focused on being in touch with the districts we represent, precisely to bring that anti-groupthink, wherewithal
I gotta
to
cancel
the
this
policy
order.
discussions. So I'm
Gotta cancel
100%
this
focused
order.
on that. Beyond monetary policy, reserve banks do a lot of other things. We of course come to the FOMC and participate in monetary policy deliberations. We help run the payment system. We supervise financial institutions through delegated authority from the Board of Governors. We provide fiscal agency services to the U.S. Treasury, and we participate in community development. And all of those things occupy 100% of my time, and that's all I'm focused on.
I see.
Yeah.
Okay. I can't believe you gave that long list and you didn't call out Fred. All right, we have time for some questions. I think I'm going to take a couple and then we'll see. In the back, and wait for a mic.
Thanks. Nick Timmeros of the Wall Street Journal. Alberto, you
congratulations
said
on
the
that
outlook
investment.
must shift further to justify
I mean,
going below or much more below a 1%
like I
real
said,
rate. And I'm wondering how much confidence you will have that you'll see any such shift in the outlook by the end of October, given how top line employment data have been more revision prone recently.
Well,
so the question
if I can
is,
kind of give myself
if
a
you were
checklist,
comfortable with one precautionary cut,
it's not a
based on
100% day
incomplete
because
data, would the same logic apply to a second cut, especially when you may not have
I did not take my
reliable
setup,
employment readings
so it's not a
for
100%
several
day.
more months?
Thanks. Over here,
I did not force a trade. My concerns was that we were in supply, and
yeah, thanks, Alberto.
I just didn't want to deal with
so
the
I was just
potential
curious, as you weigh
rejection
which
and
risk
price
to address
finding
and
support here at
consider
the
the
or
outlook for
below.
the funds rate.
I
Does the
just
usefulness
didn't.
of the tool matter at all?
I just didn't want to
it
deal with
seems
it.
unlikely restrictive
would kind of give
monetary
myself
policy is going
maybe
to
a
prevent the
70
cost push
today so
inflation of
far.
tariffs. Yet it may play a larger role in restraining
Because
the
I did
labor
everything
market.
right. It's
So I
just
was
that I
curious
did not take my
if that
setup
had entered the
regardless of how
decision
I
making at
felt.
all in terms of also the
And
balance of risks.
so
Okay, yeah, thank you.
I got to take the
So
setup.
let me start
And it was a
with
clean break and
Nick's
retest. I mean,
question.
this is a clean break and
I am
retest.
open to further adjustments in the
I just didn't
policy
want to
rate.
deal with it, honestly.
As I said, I think the space
But
for
it
doing
worked
so
out.
before
So,
policy
I mean, I
becomes
would have been up
accommodative,
in this position.
is limited. There'll be judgments about risk value judgments in the as we go along, and I'll be weighing where the economy is today, where the baseline path is that I
Yeah,
outlined,
me too, man.
and how the risks
Yeah.
look relative to that baseline path. And we're going to get some more data between now and the October meeting. I'm really focused on a path rather than the next
This
meeting.
slow price
I am
action.
taking a meeting by meeting
I mean, the
approach,
market is like, oh, we're at
because I
all-time
believe
highs.
every piece of incremental information is
There's
important.
no price
And when
action
I
to the
say
left of
information, I don't just
reference.
mean data releases.
The market is making measured
talking to
moves,
businesses,
and
talking to households, just seeing the
you
whole
just really
mosaic
don't
of
know when to get
information,
into this damn
along the
thing.
way. So data releases is just one of the things I look at. In terms of the question,
The question was basically that if interest rates can't do much to deal with the cost. Okay.
I got it. So what central banking practice says is if you have a supply shock that is one-off, by the time monetary policy reacts to it, because of the lags of monetary policy, that one-off shock has come and gone. So that is the reason why central banks tend to look through the one-off effects of shocks. Now, there are many things driving inflation. Tariffs are one of those things, and as I said, it's appropriate to look through the direct effects of tariffs on imported goods and be very vigilant about the indirect effects on non-imported goods and services, and lean against any second round effects that could occur. So that's how I'm thinking about monetary policy. I expect tariffs to fade, the effect of tariffs on inflation to fade in the next after 2 to 3 quarters.
I wonder why,
But I'm monitoring that very carefully to make sure that expectation is validated by data.
That makes sense. Why would he do
Why
that?
don't we go to this side? There's two people on the aisle here. Sir, there's a mic on your left.
Oh, Alberto,
Tell us who you are.
Rob Duggar, retired. Alberto, you spent much of your career in international economics and assessing the relationships that economic conditions affect, how they affect economies. In your presentation, you talked about the U.S. as just simply the U.S., almost as if it's a closed economy, but you know it isn't. So what international factors figure into your thinking about U.S. economic conditions?
Thanks. You want to pass it back?
Sure.
Hello, I'm Chesapeake. I'm an undergraduate student. You talked a little bit about QE/QT already, but I was just wondering what indicators or other information you're looking at to determine whether reserves are reaching a level somewhat above ample.
Thank you.
That's a good question. Not one usually one hears from an undergraduate. I'm impressed.
Okay. So to Rob's question, it's great to see you, Rob. I look at everything within and outside our borders. I think the 2 or 3 things are important now. When the tariffs were first announced, there was a angst about large retaliation of tariffs, and so far the retaliation has been more modest or almost non-existent compared to what was expected. So that's an important call it international factor. The other 2 things that are important are, we're still have large current account deficits in the country and large fiscal deficits. So, monitoring the flow of capital into the U.S. is something that I do a lot. And the other thing is As retaliation, just going back to the first point, has been more moderate than was expected earlier in the year, growth in foreign economies looks better today than it did a few months ago. So the international environment in terms of growth looks somewhat better. So those are things I factor into my outlook. Thank you. On the balance sheet question, wow, what a question. The New York Fed, we operates monetary policy, and the New York desk monitors very carefully whether we are still in an abundant reserves situation.
Congratulations on that, Alfred.
Publish many
Seems like
indicators
everybody's making money
that
except
suggest
for
that
me.
we are still in an abundant reserves
There's
situation.
a lot of
Our balance sheet has been
opportunities to make money today.
declining gradually.
I'm taking this
reduced the
trade
rate
not in the
of
stream account, but in
roll-off
a throwaway
earlier this year,
account.
so it's declining gradually.
Any trades trading against the trend,
I would expect at some
I
point in
just
the
won't
future
be
the committee
trading
to
that
make
in
a
the stream
decision
account.
before we or as we feel that we are reaching that transition point.
I'm taking this
between
because this is a measured
abundant
move.
reserves and ample reserves.
I
at
have
that point potentially
there's
pause
no confidence that this trade
the
would
balance
work.
sheet
I'm
roll-off.
just solely
I've
taking it
seen
because it's a
some
measured
market
move.
surveys that suggest
And I'm taking this
these
in
are
my
not,
throwaway account.
the committee still needs to decide, but I've seen market surveys that
My
suggest
throwaway account is
that
just an
could happen
account that I
somewhere in
use
Q1,
just to
Q2 of
take
next year, and could happen at around
just test trades out.
$2.9 trillion in reserves plus overnight RRPs. But those are market surveys.
And there's one here. And then we'll take one other one and then.
Hello, Myriam Lemétayer from AFP, Agence France Presse. My question is, Governor Myron earlier said that he hopes he will convince his colleagues that we need to go further, to lower further the rates, and that he has some really comprehensive arguments to share with them. Do you think there is some data that you might have missed, for instance, on the effects on tariffs, on inflation, that you can be convinced by you and your colleague? Thank you.
Okay. And then over here, Pedro. Just coming to your right, Pedro.
Thank you so much. Pedro da Costa with Market News. My question is, given your view of where neutral rates stand, is it fair to say that you don't see this as the start of an extensive rate cutting cycle? In other words, is there a possibility that the Fed could actually be on hold either now or after, say, another quarter-point rate cut? Thank you.
Yeah, I can't prejudge. I'm going to come back to your question in a minute. I can't prejudge what the committee will do at each future meeting, so I won't be able to answer that question. But I did say, in terms of my own opinion or my own view, that I would be prepared to go below that 1% long-term real neutral rate, provided I did see labor market weakness risks rising, and if inflation expectations remain anchored, and if there's no further persistence of the inflation path. So, I never think of the long-run neutral rate as some sort of artificial boundary below which you can never go. But you have to go there under the right baseline outlook and shift and balance of risks. Sorry, can you repeat your question? I didn't.
She wanted to know, is there anything you might have missed that would have justified the Myron-style rate cut?
Okay. So let me just say I have a tremendous respect for all of my FOMC colleagues. All 19 bring very valuable insights about the economy and overlay their own policy views on those insights. I take vigorous notes during the meetings, and I learn a tremendous amount from all of my colleagues, and everyone does the same. So there's a tremendous learning situation. Right now, I'm not going to opine directly on one governor or one Reserve Bank president's views, but as I said earlier, right now the real rate is already at or slightly below our neutral real rate. And at this juncture, taking it much further below that would mean a zero or negative real interest rate at a time when the economy is at full employment, when inflation is above target, and financial conditions are accommodative. So that's how I'm thinking about policy.
You mentioned communications a couple of times. I understand the Federal Reserve is thinking about changes to its communication posture. If you could make some changes to the summary of economic projections or other communications, what would you recommend?
So I think communications or changes to communications always have to be anchored with the objective of making sure the public can better understand our reaction function. You know, more information for the sake of more information isn't what we should be seeking. We should be seeking the right information so folks can understand our reaction function better in real time. So with that in mind, I think that the world is an uncertain place. You have to bring a healthy dose of humility when you're making policy decisions or policy recommendations. And therefore, I would favor in communications talking both about the modal path, in other words, the most likely path for the economy, and about alternative paths for the economy so that the public can understand better how we would behave in the modal path and in alternative paths. So I favor that in communications, and I think I did that, some of that today. In terms of the SEP itself, I think there are a few areas of improvement in the direction of better understanding our reaction function. Number one, it's very important that people understand the SEP is not an output of the FOMC meetings, it's an input into the FOMC meetings. That's a very important thing. Two more things on the SEP. I would favor connecting the dots. By that I mean connecting the inflation, growth, unemployment, and interest rate paths anonymously for each FOMC participant. So with a number, you could connect, okay, number 22, no, sorry, 22 is not possible. Number 12,
Yeah.
Number 12 has, you know, this growth path, this inflation path, this interest rate path, and it's all internally consistent. Why is that important? That would allow the public to understand the individual reaction functions of these anonymized folks and the collective reaction function. More importantly, different participants have different scenarios in mind. And going back to my earlier comment about baseline and alternative scenarios, that would provide the public with information without, you know, outing any one participant. The other thing I would recommend in terms of the SEP is right now the SEP is calendar based, so you know, yearly based. I would favor an SEP that was had a fixed horizon. So instead of looking at the end of 25, it always looked forward 1 year or 2 years or 3 years. I think that would make it a more effective communication tool, because when you get to the end of the year, those SEPs become very informative, and the public is very focused on what that means for that one December meeting, as opposed to thinking more long-term about a path.
In regard to your first part, do you think the FOMC itself should give alternative scenarios? Is that what you're suggesting, or just people in speeches like you did?
I think both. I think it would be helpful, not all the time, but when necessary. It would be productive for the FOMC to maybe consider an alternative scenario in the SEP. I would be supportive of that. And of course, there are other opportunities like this one where folks can talk about alternative scenarios that they're considering.
Great.
Yeah.
Please join me in thanking President Salem. And if you could, two things. If you could stay in your seats, because he has to run, get your plane, and also if there are coffee cups at your seat, if you put them in the receptacle at the back, our maintenance staff will appreciate it.
All right. St. Louis. All right. I think that's it. I think that's it. Maybe that's what the market was waiting for. Maybe that was what it's waiting for. Okay. Well, it was slow, but I definitely would have gotten all my targets hit here. Actually, I would have had one runner left. And my runner would be exactly where my stop is. Hmm. Oh shit! I didn't realize. Oh man, I didn't realize that. I did not realize that until I just really looked at the charts. We're about 80 points away from 25K right now. I'm pretty sure that's the Bulls' current market objective is to take out 25K. I didn't realize that until now. Yeah, I gotta go. Hmm. Mm. It has to be accepted as tender, huh? Yo, congratulations on that, Alfred. And that's probably the best idea. Like I said early in the stream, today would probably be a day that I would take off. There is no energy in the market right now. Literally no energy right now. I don't feel it. I'm not feeling the energy at all, Nasdaq. If anything, I feel like the Nasdaq is draining me of energy right now. She's definitely draining me right now. He says good price action. Yeah, I mean, like I said earlier too, Cave Trader, it's good price action when you're in it and you're green. It's definitely slow. Well, I guess what I should say is that it's just very slow. It's slow. The grinding is very exhausting. The grinding is exhausting. But the price action itself, I mean, it is textbook. Mm, and that's a textbook breaking retest trade right there. That's textbook right there. So then we got a breakout, price grinding, riding the 21 EMA. It's riding the 21 EMA. So I mean, yeah, it is good price action. It's just very slow. Uh, well, there it goes. You said ES made all-time highs, but MES hasn't. What is all-time highs for ES right now? Yeah, that's true. It's too simple. It's too simple. It's too simple. Abort. It's too simple. Yeah. My mind is meant for a complicated task. Easy task throws me off. Keeping it simple is just I keep it simple on complicated task. If I can solve a complicated task with a simple solution, then that is my zen. But when it comes to a simple task, well, to balance it out, I need a complicated solution. Well, it doesn't matter. I mean, from 913, yeah. Red Durag equals bearish. The red Dewey. Okay, well, I'm not going to do that. I'm not going to trade like that. Not on gold. I just won't do it on gold. I will not trade that way on gold. Ugh. Yo, congratulations on that, K Trader. Or I don't know if you've hold on. I get so bad about I don't know if you answered the question. Okay. So K Trader says that he still needs to make 2K on the Apex to get paid. He made 4K in the account. His biggest day was 1800, so he needs to make 6K to be in the 30% consistency. 6K. You only have $500 a day on the Apex account. Is Apex currently doing a oof. Today's price action? Oh, dude, I don't know. This is the closest thing. Mm. Yeah. I mean, secretly, that's all I really want. Secretly, that's all I really want. Oof. Yeah, I just keep it. Yeah, I mean, I guess it doesn't really make sense. I guess it doesn't really make sense. You know, I thought about closing this position as it was going higher. I thought about closing it because I was like, well, I mean, I might as well just close it before it hits my stop. But then in the moment, you know, that made sense. And I was about to close it too until it actually uh, it dumped at 38. It kind of dumped at the same time when I had this thought. And now I'm thinking to myself, why would I take myself out of a trade earlier because I don't want it to hit my stop? My stop should represent where I want to get out of the market. I shouldn't get out before that mark. I shouldn't. Because past where my stop is, I don't want to I no longer want to be in the trade, and that's where my stop point is. And actually getting out before my stop gets hit is kind of silly when I really think about it. I shouldn't be getting out of the trade until either my stop or my target gets hit. I shouldn't be manually closing the trade out. I don't want break even. Mm. Okay, so at least I know. At least I know. Well, if we see the bears break underneath this 50 EMA, we should at least see VWAP 200 EMA, potentially R1. If we see the bulls kind of take profits here and fail. I can see the bulls trapping the bears underneath the 50 EMA here. I can see that. They did it here. The bears got underneath the 50 EMA. They tried to use the 50 EMA as an area as resistance, and they got stopped out. So we could start to see some profit taken here from the bulls, but I'm pretty sure if you don't take profits this is going to be a situation where if you see the profit, you take it, because it's definitely going to be an uphill battle. Kind of like what happened on Friday, where I was up about 30 points. The Nasdaq found a way to miss my target and stop me out, and then come back later on that day and hit my target. All right, let's see. We'll see if the bulls trap the bears underneath this 50 EMA here. If you can see a clean breakaway, then I should at least get that first target hit. If not, then I'll get stopped out. I mean, sometimes I just don't want to deal with certain things. That's why I just don't want to deal with it. I mean, it works out, and if I take the setup, I'll be relieved. But man, sometimes I just don't want to deal with it. I just don't want to deal with the setups because I I'm starting to pick up on a pattern that I have sometimes when I don't want to deal with a position. What I think, what I just revealed to myself is what I'm really saying is, if this trade loses, I don't have the energy to revenge trade and try to get my money back. I just revealed that to myself, is that I don't want to come back and revenge trade. I don't have the energy, or I don't have the energy to revenge trade to get my money back. I don't want to utilize patience for a follow-up entry. I'll say that another thing that I guess one of the main reasons why I didn't want to really deal with that trade this morning was because for whatever reason I did not want to go to sleep last night, and I went to sleep at the last minute. I just kept waking up last night. I went to bed after the stream, and then I woke up around like 2 for whatever reason. Went back to bed around 3 or 3:30 and woke up at 5:30 to start my morning routine. Mm. Make the market great again. Oh, boy. This is when I don't like trading this market. When the market is trying to be bearish, but the bulls are being too aggressive and won't allow the market to be bearish. But from what I'm seeing right now, the market is making a microstructure, is making lower highs, and it's making lower lows. I understand that when it comes to the Nasdaq, sometimes it doesn't mean nothing, but the structure is technically bearish. This microstructure, not the overall structure, but this microstructure right here. And in this situation, this is when trading the Nasdaq can definitely be challenging because it's going to feel bullish, but the market is trying to pull back. The bulls have to break this structure to the high right here, this pivot high. So they have to break R3 and they have to break and find support above R3 and push it higher. So the bulls are going to have to do something like this. They're going to have to break that pivot high. They have to pull back, hold it, and then we'll see a continuation from there. That's what the bulls need to do in this situation. Mm. All right. Yeah, it's just basically this block of price action right here. It's the same thing. Probably like right there or something like that. Yeah, you don't need that. And just trade with the trend. I mean, technically, I mean, technically, that would have been tough. They would have missed it. Man, this would have missed it. Right? Okay. Today was definitely not a fun day. It definitely wasn't. Honestly, I probably should close this now because if we don't, if it trades above the swing high, then I mean obviously the bears suck. So we're not gonna get that bearish follow through if we get price to break this swing high right here. The bears should be able to hold this, and we should see at least a move down. We're making lower lows, and then we're making lower highs. So we should see a rejection here, but I doubt it. I doubt it. But with this slow price action, it's kind of hard to tell. So it's hard to tell. But all right, guys, that's it for me today. Obviously, I should have taken the orb high trade. Just didn't want to really deal with it. But I guess in this situation, for whatever reason, the market decided to go ahead and just blow through supply and make new all-time highs here on the Nasdaq. So just like Cave Trader says, I should have taken the setup regardless of how I felt about it. And that's absolutely correct. That's absolutely correct. So I'll definitely use this situation as a lessons learned. But that's it for me. I appreciate all those that have joined. We will definitely come back tonight, and we will definitely look for more opportunities to earn some more money. And with that said, peace out, everybody. Have a good day.